Hello, this is the tradesight stocks and futures market preview and U.S. economic data roadmap for the week beginning Monday, the 23rd of September, ending Friday, the 27th. Hope you've had a great trading week. Charts, as usual, brought to you by eSignal 11. Here is the S&P daily chart. Some interesting stuff here. We had a spike this week on that Fed announcement, the continuation of QE. Caused the market a little bit surprised because people thought maybe they were done. But what's interesting here is before that, we did get the 13 sell signal that we've been waiting for over a month now. Finally got the 13 sell signal on Monday. Tuesday didn't do much. You can see the pink risk line. We did shoot above that on Wednesday on the Fed announcement. But again, you need the confirmation day above that to really crack that line. And instead, we're rolling over here Friday with triple options expiration. We rolled. So that line is still resistance. The 13 sell signal is still in place. I think you got to be aware of that. I think a lot of people think, oh, QE's still going, the market still goes, but it feels like, at least in the short term, there might be more going on. Obviously, you've got the threat of a looming government shutdown that'll be painful to the market while that goes on, if it happens. So that might be part of the reason here. But in general, we're in a time of year where things tend to dip and dip hard. You know, most crashes occur in that September-October region, traditionally speaking. And not that I expect a big crash, but you could get some significant downside, and then you usually bottom out and start on a roll again after that. So this 13 sell signal, the timing-wise, certainly plays out with that theory. Now here's the NASDAQ, which had a 13 sell signal way back in August and used that for the month of August, and then started to break above it early September. So now you got again, the spike there on Wednesday, the start to roll over on Friday with the triple expiration. Stocks rallied this month, the semiconductors, but really, if you look at this through June, back to June, this thing's gone nowhere for the most part. So there's no excitement. Biotech's a little stronger, and that is interesting because biotechs tend to lead the market. They didn't roll as hard on Friday either with expiration. I should also show you the small cap index, the Russell 2000, clean breakout this week. But again, a 13 sell signal from back at the beginning of August, and even though we're above the risk line on the Fed announcement, no confirmation yet. So we'll roll over there. That's still in place. Let's show you oil really quick with everything that's going on in the world. Kind of on the lows of the last 2 months. We're got a few weeks left of hurricane season. Summer, things are going to start to cool off, and depending on how things go, obviously in Syria and that part of the world, we could see oil prices start to come back. First target would be that 94 area, which is that red static trend line that you see down here from the last 9-bar move up. And I'll point out, 9-bar move up, seeker on the daily, 13 sell signal, risk line, broke it but couldn't get the confirmation, broke it but couldn't get the confirmation, rolling over. The 13 sell signal is in place. You get under this 102 area, and then it's a free fall back to 94, maybe a little support at 98, that breakout right there. Okay, so just be aware of that. That's what we're seeing right now in oil. And here's gold. Also starting to roll over after having one little bounce since the beginning of July. All right, let's take a look at some of these futures in terms of the intra-week action. Let's see what we had this last week. So this was last Friday on the far side, the close on the far left side of your chart. You can see the gap up Monday. So we never filled that gap. This is on the ES, the S&P E-mini futures. So that gap remains. Tuesday, just look at that. Doesn't get any flatter than that. That was a complete waste of time after the first 10 minutes of the day. Everything is sideways. Then Wednesday, obviously a waste of time until the Fed announcement, which spiked the market very quickly. You got a 13 sell signal on the top of that. Just barely got the confirmation, almost didn't. And if you look at it, really, it still was the top, right? We closed above it, and we went above the high of that day. That's why the risk line stopped, because it violated it under those rules. But in general, this signal got as close as it could to producing the high of the week. Little gap up on Thursday and filled it, kind of drifted sideways. Going into triple expiration, and as I pointed out in the report, we didn't really get an unraveling move. I kind of assumed something happened here in the Fed announcement with all the volume. But you kind of looked like this was an unraveling move after the first hour on Friday. We headed down, volume stayed higher than it usually does, and we kept heading that direction. So that it almost looks like they waited to Friday to unravel, which is really unusual. So you did get a little bit of movement there. It closed mid-range for the week. Overall, the whole week is from 1688 to 1724. So you got about 36 points of range, leaving the gap behind on Friday. That's on the S&P E-mini futures. Here's the NASDAQ 100 futures. A little different story here. Gapped up Monday and sold off sharply. It filled the gap from Friday's close. Kept going lower. Tuesday gapped up a little bit and never actually filled that gap. Ran a bit early, was dead flat. Wednesday, small gap up that did fill. Then the Fed, little gap up on Thursday that didn't quite fill, came really close. But then on Friday, that gap did fill from Thursday, and now we're on our way down. So you've got these static trend lines, red and green, on the 10-minute chart. And just so you understand, I don't tend to use the 10-minute chart. Is not where I look for my signals anyways. Okay, I'm usually looking on a 5 or 15. But the 10-minute chart, for purposes of this, lets us see the last week, including where we were last Friday. That's why I use it the way that I do when I do this presentation. So let's take a look now at the economic data coming out this week. We have no data on Monday. Keep in mind, Monday is going to be the first day of a new option cycle. So even though it's nice to have that option stuff behind us, the triple expiration, it's nice to have the Fed meeting behind us. Monday could still be a little slow because it's the first day of the new cycle. Then you move on to Tuesday, where you've got the Case-Shiller 20 City Index, FHFA Housing Price Index, a lot of market housing data. Consumer confidence can be a big number, 30 minutes in on Tuesday. Let's be aware of that. Wednesday, MBA Mortgage Index, durable orders, durable goods, new home sales, crude oil inventories, nothing major there. Thursday, the usual weekly initial and continuing jobless claims data, nothing really unexpected there. Along with the third look at GDP for the second quarter, that's not an important number. Pending home sales, natty gas. And then on Friday, personal income and spending, PC prices, and Michigan sentiments. There's really none of our big data coming out this week. There's nothing to focus on. I would say, if anything, the focal point is going to be keeping an eye on what's going on in Congress and whether or not they keep the government open, or we go through another protracted battle over budgets for no reason and shut the government down and all the fun. If you've been around in the last 20 years at all trading, you know how these things go in the markets when they occur. So we're going to get probably some activity, unfortunately, to the downside, which is fine for us, but not for everybody. If that really gets that far, let's just hope it doesn't, because it's not worth it. All right, everybody have a great week. We will be calling it in the lab and in the room as usual. Regular reports will be posted, and good luck trading.